How do I use stock volume to my advantage? In this video we will delve into the world of stock volume and how it can be utilized to improve your trading strategies. Understanding stock volume is crucial for any technical analyst, as it provides valuable insights into market sentiment, supply and demand dynamics, and potential price movements. So, let's dive in. Stock volume is the total number of shares or contracts traded during a specific time frame. It indicates the level of market activity for a particular security.
High volume suggests strong demand, while low volume indicates a lack of interest in the stock. Volume can also confirm price movements, as significant increases in volume may signal a potential trend reversal.
Volume is a key indicator used by market analysts to assess the supply and demand situation of a stock or index. On average, billions of stocks are traded monthly in the stock market, with volumes reaching trillions during periods of high volatility. Volume is essential for traders and investors as it provides insights into market liquidity and helps identify potential breakouts or breakdowns in a security's price.
The volume indicator on a stock chart is typically represented by vertical bars on the x-axis. Each bar represents the number of shares traded during a specific period. Green bars indicate positive volume, suggesting a rise in the stock's price, while red bars indicate negative volume, indicating a decline in the stock's price. Monitoring volume is essential for evaluating the strength of market moves and confirming trends. For example, a significant increase in volume during an uptrend could signal a continuation of the trend and present potential buying opportunities. Conversely,
a decrease in volume during a downtrend could indicate a potential loss of momentum and potential selling opportunities. A blow-off top is a rapid and steep rise in a stock's price, followed by a sudden and dramatic drop. Conversely, a blow-off bottom is a sudden and steep drop in a stock's price, followed by a rapid and dramatic rise. These events often occur near the end of a long-term uptrend and may signal a potential trend reversal or overbought and oversold conditions. To read volume in stock charts, you need to evaluate the stock price trend, look for spikes in volume, and observe price movements before and after the spikes. Identifying volume surges can help you understand supply and demand dynamics, making it easier to identify potential winning stocks and make informed trading decisions.
There are 4 excellent volume indicators in technical analysis software: volume bars, volume profile HD, the volume weighted average price, and vertical volume. Each indicator offers unique insights into supply and demand, helping traders identify entry and exit points for their trades.
Understanding stock volume and effectively using volume indicators in charts can significantly improve your trading skills and decision-making. Monitoring volume helps you identify market trends, confirm price movements, and recognize potential opportunities in the stock market. As you delve deeper into the world of volume analysis, remember that knowledge and practice are key to becoming a successful technical analyst. Free and pro investing courses, strategies, and original research at liberatedstocktrader.com.